capital city home values increased by 0.3% over the month. Melbourne and Canberra were the two cities where values fell, down 0.5% and 1.1%. And then elsewhere we saw growth in each capital city, but the level of growth was typically more moderate than what we've seen over the first 3 months of this year. Sydney, for example, saw values up 0.5%, but some of the other markets where we haven't seen such strong capital growth conditions have shown signs of improvement. In Adelaide, values were up over 2%. Brisbane values are up about 1%. So a bit of a mixed bag, but generally speaking, the rate of capital growth is slowing, and that's a bit of a seasonal thing taking place at the moment. We tend to find that the first quarter's very strong for capital growth, and then the second quarter's usually a much lower level of capital growth than what you see over that first quarter of the year. Same sort of deal there. Obviously, both Sydney and Melbourne have been very strong. We know investors are very active in the market at the moment. From an investor's perspective, your best opportunity for both of those markets was about 24 months ago. They've seen strong capital growth. They've seen yields fall. Whereas a market like Brisbane, you're seeing fairly high yields, comparatively speaking, and the gap in pricing between Sydney and Melbourne compared to Brisbane is really widening. So it's looking more attractive from an investor's perspective, stronger capital growth potential, but maybe even potential buyers from Melbourne and Sydney maybe looking to a market like Brisbane where housing is a lot more affordable than it is in the city they currently live. Well, I think first home buyers are still finding it very difficult. There's a lot of investors in the market, and the chief concern with the first home buyers is if they're not getting in the market now when mortgage rates are so low, what's the likelihood that they're going to return once those interest rates start to climb? So I think they're definitely missing out a bit at the moment. Investors are obviously very active. Lots of people are, particularly in Sydney and Melbourne, have got a good position to try and refinance. Maybe reinvest, and we know that there's a lot of people looking to upgrade. As for the best cities at the moment, we still think that Sydney's going to continue to see capital growth. Over the last decade, there hasn't been much in the way of capital growth here in Sydney. Melbourne, we think, is probably going to soften a bit. Unemployment's a bit higher there. It's had a better long-term capital growth rate, and obviously we think the Brisbane market, which is now showing signs of growth, is probably going to be one of the better performed markets over the next 6 months or so. Yeah, I think Canberra's just in a bit of a state of wait and see at the moment. Obviously there is a lot of rumours around about job cuts in the public sector and different things happening there, and I think people are just pretty much sitting on their hands and waiting to see what the wash-up is from the budget when it comes out later this month, and hopefully a bit more of that information will be revealed. And obviously it could go one way or another. If we see lots of job cuts, that could hurt the housing market down there. If job cuts aren't as severe as people are thinking, maybe we'll see a bit of an improvement in that housing market.